joining us now. Okay, we talked a lot about him at the top of the show. He got on the horn. B. Riley, Chief Investment Strategist Paul Dietrich. And we are also joined by RBO and Company Managing Partner Jack Oliver. Paul, we were talking about you because you have pointed out that the S&P could pull back to 4,500. That would be a major contraction and a major contrarian view on the street. And your thesis is that you do see a recession this year. Tell me why.
Well, I do think that we'll have a recession, but even if we don't have a recession, we're still going to pull back to probably 4,500 because that would take the S&P basically back down to its 200-day moving average. That's kind of the long-term trend of the S&P. That would be, some people would think that's fair market value. And so if we go into a recession, there's probably historically, when you go into a recession, the market, the S&P 500 has dropped 36%. So we could see a 36% drop from 4,500 if we go into a recession. But even if we don't go into a recession, every method of valuation is showing that it should be somewhere around 4,500.
Well, we're at 52.38, and you obviously believe that we are in a stock market bubble. Jack, you say, listen, part of the bubble has really been filled by these AI companies and anything that says AI. You are saying stop obsessing about anything AI, go elsewhere. Where?
Well, the three names that we have for you today, Liz, aren't going to be impacted by any measurable amount by what the Fed does, what happens with this AI boom. And they're all traded on average at levels below the S&P 500 valuation-wise. They've been making money for over 100 years. And most importantly, all three of them are in the midst of what we see as strategic evolutions that should sustain their long-term growth.
And the names are?
The names are Johnson & Johnson, which has just separated from its consumer business and will be a faster-growing, more higher margin company. Mm-hmm. The second is Brown-Forman, which has made long-term investments outside of American whiskey, namely tequila, Scotch and gin, which will drive overseas growth, which is now greater than 50% of sales. And lastly, Philip Morris International, which has invested about $13 billion in the heat not burn category, which now in their most recent quarter, they actually sold more of those products than their historic Marlboro brand.
Paul, I'm going to give you the last word, but you say no one should be investing new money in the stock market. Where? 30 seconds. Should they invest?
Your grandmother told you when you were a little kid, buy low, sell high. You're buying in high, and right now the best place you can be is short-term treasuries, pay 4 to 5%, and gold. The smart money around the world is piling into gold because they are completely for value market.
Gotcha. Paul Dietrich, Jack Oliver, great to see you. Markets